2024 is looking very promising. Let's check out this week's stock picks right now. Who's ready for stock picks? Anybody? Anil, you ready?
Yes, let's do it.
Let's do it. Okay. Now, one of our stock picks is full disclaimer that AutoPilot Trading has been in this stock and is currently in this stock. And this is AMPH. This is Anil's pick for today. Anil, what's up with AMPH?
One of the pharma stock and came out extremely strong on one of the tightest screen. Here's SMR of A, accumulation distribution B, up-down volume ratio of 1.7 and comp 99. And it does have an active weekly triple screen signal, but it's still in the base. That's the reason I picked it.
Yeah, I really like it. A really nice cup thing going on there. It may put in a little handle, but you have to wait for it. So are you buying now? Are you going to buy off the 8-day moving average there or wait for a little bit more of a pullback?
No, I think I probably will buy today.
Okay, cool. Yeah, I could agree with that would be a good trigger to get into. My stock for the day, or my first stock, is ARM. Now, this particular choice will require patience on your part, because right now I'm getting one big bearish reversal signal on ARM. However, ARM is number 2 right behind NVIDIA within that industry group. So it has had one heck of a run. It came back in September of this year, did its IPO, came down, bounced, and took off like a rocket ship. And now heavens are taking profits on it. So I'm going to be watching this. Where is it of interest to me? It's of interest to me right here at the 78.6. Not with that big pin. Different color here. Right here at the 78.6. Okay. And notice that that's a breakout area. Another breakout area is getting close to the 618, and then a whole bunch of this consolidation right here, strong consolidation and takeoff with the buys here. So this whole Fibonacci magic fib box is a great place to look for a potential. We could get down into there. So I would lay in a alert just above that, the 78, just above the 61, and just above the 50, and then just stand by until it was actually triggered. So we have 2 great questions today, folks. And these questions, the first one will be really quick on both of our parts, I believe. Anil, I get this question all the time from a lot of folks. They ask me, how much money do you need to start trading? Now, I have my answer. When people ask you that, what do you tell them?
I think my rule of thumb, I tell them that if you're getting into it, you can get as small as maybe 3 or 4 stock, but the reasonable number I told them is about 5,000.
Okay. Yeah. So about 5,000.
Yeah.
And my answer to that, how much money do you need? Now, you're going to find this is probably a little bit shocking. I tell them 0. Now, that could be shocking to you, but the reason I say 0 is because I tell them that if you don't have a plan on how you're going to trade or a plan to get started learning how to trade, you might as well just give your money away. So that's why I say start practicing, start learning before you get the money. And that way, hopefully you'll have some good muscle memory for how to trade. But I agree with you. I encourage them while they're learning how to trade with no money, using paper trade and that kind of stuff, they need to be saving up a bankroll of somewhere between $2,000 to $5,000. There's something about $2,000. That's when you can start your margin kicking in. And so that's my answer. Now, I love this question. This next one. Anil sent this to me a little bit earlier today. So, Anil, what are 2 or 3 habits that traders who beat the market on a yearly basis have?
I've been researching that, and particularly it's becoming more relevant because I'm coaching people now and they're asking the question. And where I'm finding so far is the winning traders have this set of rules and they stick to it.
Right on.
That's one of the main thing. And then most of the time they've learned how to stick to their system, because a lot of time people do system hopping from one to the other
Mm-hmm.
and then they get strayed. So those couple of things that I'm leaning towards. What are your thoughts?
I agree wholeheartedly about having a written plan. And I have to admit, whenever I started trading, I didn't have a written plan. I thought trading was going to be so easy that because I'm a smart engineer, I could figure my way out of all kinds of different things. And I figured that would be directly transportable into trading stocks. And I was absolutely wrong. And so, what makes me successful today is one, having a trading plan, two, and following the rules specifically to that trading plan. In other words, no impulsive or compulsive trading. And then learning how to manage emotions and be patient so that I don't get a nervous trigger finger on my mouse to make trades. Because I used to have what they call it itchy mouse finger to make trades when I shouldn't be making trades. And the last thing for me is define a specific time I want to be in the market. The only time I really want to be looking at anything live in the market is the final hour of the day. Everything else, except the final hour, is noise designed to get me emotional and make stupid decisions. But other than that, I don't have a strong opinion on that, Anil.
One thing I learned actually was from Tony Robbins and his book that came out, even though I knew it and I've gone through all kind of his training, but somehow I strayed and I said that's 80% psychology, 20% strategy. And yet
Yeah,
strategy is extremely important. But if you don't execute the strategy, and that comes from the psychology part, then
right.
you fall short.
Yeah.
I'm coupling the psychological tools and bringing down to about 7 or 8 psychological tools that should be consistently applied. And I'm still working on it, developing it.
We have a couple more stocks to take a look at, which is cool. This one was really interesting. HUBS. That's
Yep.
HubSpot, right?
Yeah. They're in computer software and enterprise market, and they're improving the customers for their sales and marketing.
Okay.
Honestly, don't know much about the company itself. I focus on my screens and fundamentals. And again, this came out very strong.
Okay.
SMRA accumulation distribution B up down 1.5 and comp 98. And it has a weekly triple screen active. It's slightly out of the base, but maybe beginning their upward journey. So that's the reason
This one, I would want to look at it on the monthly chart. Isn't it interesting how you switch to the monthlies and all of a sudden you see a completely different picture? That looks really nice, Anil. So I like it. Hubs. So are you buying now? You gotta let it pull back.
I probably pull back there just a little bit. I think it's coming, breaking out of base, and but slightly. It's not gone away too much.
Yeah. And I show it about 4.5% away from its breakout area.
Mhm.
And so that's a breakout of this line over here. So excellent. So here is a fun little leverage ETF that I'm taking a look at, and it is TZA. Now, TZA is the inverse leverage ETF of the Russell's IWM. And what has intrigued me about this is that while, and I have to show you, we got to start by showing you IWM first. So on IWM, notice this huge shooting star right here. That translates over on TZA to a huge hammer. Now, I'm not going to buy exactly right this moment in time. At the same time, though, I want to be ready. And where am I expecting it to go? If I pick up just a few percentage, and I'm going to go here and just grab this off the fibs. And if I go from where I'm at right now, just back up to the inside the fib box, I'm looking at a move of about 36 to 49%. That would seem reasonable. And if I do, since it's a inverse leverage ETF, I would be looking at buying just a partial position, but it looks really good to move back up to the upside. But I'll take my clues off of either TNA or IWM. And so what I will do is I will put an alert here on IWM on prices getting back up to about the 203 to 204 level. Now, 203-ish, 203.50. And if that triggers and it reverses back down, then I want to be ready to buy TZA. So there's an inverse ETF, and with as strong as the uptrend has been here lately, it wouldn't be surprised to see a 38 to 50% pullback, just like Charles Dow used to wait for. Anil, what's your thoughts on this one?
Oh, this one I'll have to wait. I'd wait patiently till my triple screen system shows a reversal.
Okay.
Right now, it shows a strong downward trend as we can see it on daily as well as weekly.
Yep.
So I want at least MACD to turn around. Right now, MACD is also going straight down.
Yep. And the other thing I like about this one on the weekly charts is I've got a 3-line cluster here on my market forecast.
Mhm.
And I just had a 3-line cluster here on that day right there. And we did get the reversal. However, it's not out of the woods yet, but it's just something I'm definitely going to be watching moving forward.
That'll be nice. You can pick
So,
up 30% or so, boy, that'll be great.
yeah, that'd be a great way to start 2024. Just a reminder that trading success isn't built overnight. It's built by a step-by-step process. I normally don't say anything about the AutoPilot Trading premium membership, but it's that time of year where maybe you need to make a decision to get on board, take a test flight with the AutoPilot Trading system. Here's what one of our members has said. He came on board here recently. And I love it when people send in and say, hey, I'm using the system and my portfolio is heading in the right direction. Until January 5th, I'm going to be offering this at a 15% discount, and you can use this code right here. And I will put the link in the link for the membership in the description. If you found this session valuable and you're ready to supercharge your trading, take action, join our community, join us every Friday as we help you pave your path to financial and lifestyle freedom. Remember, all materials that we do provide are for training purposes. Traders should always pay per trade any new method, probably the risk of their own personal capital. And past performance is not an indication or promise for future performance.